Nvidia, the darling of the chip world, just got a reality check. The company, known for its cutting-edge technology and dominance in the AI chip market, is now facing significant challenges. The company's stock took a tumble, almost 7%, on Wednesday, April 16, 2025. This sharp decline has sent shockwaves through the tech industry and among investors. Why the sudden drop? The US government tightened its grip on AI chip exports to China. This move is part of a broader strategy to curb China's technological advancements. These restrictions are a major blow to Nvidia. The company has heavily invested in the development and production of these advanced chips. They directly target the company's H20 chips, which were designed for the Chinese market. Investors are worried. The Chinese market represents a significant portion of Nvidia's revenue. They're wondering if this is the beginning of a bigger downturn for Nvidia. Analysts are now revising their forecasts and trying to gauge the long-term impact. The tech sector is already on edge. Companies are bracing for more regulatory hurdles and market volatility. Global tensions and economic uncertainty are making investors nervous. The geopolitical landscape is becoming increasingly complex. This latest news just adds fuel to the fire. The market is reacting to every piece of information with heightened sensitivity. The question on everyone's mind: can Nvidia bounce back? The company has faced challenges before, but this time, the stakes are higher. Investors and analysts alike are watching closely. The export restrictions aren't just bad news for Nvidia's reputation. They are a significant blow to the company's financial health and future prospects. They're hitting the company where it hurts, the bottom line. The financial repercussions are immediate and severe. Nvidia announced a whopping $5.5 billion charge. This isn't just a number, it's a reflection of lost opportunities and diminished market presence. This charge is directly related to the lost revenue from the China export ban. The ban has effectively cut off one of Nvidia's most lucrative markets. That's a serious chunk of change, even for a giant like Nvidia. The financial hit is substantial and will likely have long-term effects. This charge is a clear signal. It indicates the depth of the impact that geopolitical tensions can have on global businesses. It shows the real-world financial impact of geopolitical tensions. These tensions are not just political, they have tangible economic consequences. It also highlights the importance of the Chinese market for tech companies. China is a massive consumer of tech products, and losing access to this market is a significant setback. Losing access to such a huge market is a major setback. The ripple effects of this loss will be felt across the company's global operations. It remains to be seen how Nvidia will adjust its strategy. The company will need to innovate and find new markets to mitigate these losses. One thing is sure, the company needs to find a way to offset these losses. The coming months will be crucial for Nvidia's future. So what are investors saying? The markets are like a giant game of poker. You have to read the signs to understand what's going on. One way to do this is by looking at candlestick patterns. On April 16th, Nvidia's stock formed a doji pattern. Think of it like a big question mark on the charts. A doji means indecision. Investors are torn. Some see the dip as a buying opportunity. They believe in Nvidia's long-term prospects. Others are heading for the exits. They're worried about the impact of the export restrictions. This uncertainty is reflected in the doji pattern. It suggests that the stock could go either way in the short term. Section 4. Charting the course. Key support and resistance levels for Nvidia. Let's talk technicals. Understanding these levels can provide valuable insights into potential price movements and help in making informed trading decisions. Traders and investors rely on key levels to make decisions. These levels are determined by historical price action and can indicate where the stock might find support or face resistance. These levels act like floors and ceilings for the stock price. When the price approaches these levels, it often reacts in a predictable manner, either bouncing back or breaking through. For Nvidia, there are a few crucial levels to watch. Identifying these levels can help traders set their entry and exit points more effectively. On the downside, we have support at $96. This level has historically provided a strong base for the stock, preventing it from falling further, and then again at $76. This is another critical support level that is held up during market downturns. These levels represent potential buying zones. Investors often look to buy near these support levels, expecting the price to rise from there. On the upside, resistance sits at $130. This level has acted as a barrier, preventing the stock from moving higher, and $150. Breaking through this level could indicate a significant bullish trend. These levels are like hurdles for the stock to clear. The more times a stock tests a resistance level, the weaker it becomes, increasing the chances of a breakout. If Nvidia breaks above $150 with conviction, it could signal a return to its former glory. This would attract more buyers, pushing the price even higher. It could signal a return to its former glory. Traders would see this as a strong bullish signal, potentially leading to a sustained upward trend. However, if it fails to break through the resistance, we could see further downside. This would indicate that the sellers are still in control. We could see further downside. Traders might then look for the stock to retest lower support levels, potentially leading to a bearish trend. Section 5. Nvidia's next move. Navigating uncertainty in the tech landscape. The road ahead for Nvidia is uncertain. The export restrictions are a major challenge, but don't count this tech giant out just yet. Nvidia is a leader in innovation. It has a history of overcoming obstacles. The company needs to adapt. It needs to find new markets and revenue streams. The coming months will be crucial. Investors will be watching closely. They want to see how Nvidia responds to these challenges. This is a critical moment for Nvidia. The company's future may depend on its ability to navigate this turbulent landscape.